for coming on the podcast today. How are you doing, sir?
Excellent. How about you?
I am doing great. To get started, maybe you could just take a moment and tell us a little bit about your practice and what you specialize in.
Sure. So we're a registered investment advisor. Main office is in Bohemia, New York, but we also have an office where I'm located up in Beverly, Massachusetts. And we have clients in 15 states. We're a fee only fiduciary with a specialization in both financial planning and investment management. We primarily serve three groups of clients: the younger saver, the pre-retiree, and the post-retiree that had been a do-it-yourselfer. So we have just under 300 clients and do comprehensive financial planning. We work with our clients on estate planning, tax prep, but not filing, tax planning, and we serve clients in multiple facets.
I love it. Maybe you could take a second to explain a little bit more about maybe what inspired you to do this. I think you're a second generation, right? Your dad started the firm. Is that right?
That's correct. My father, um, who's educated in chemistry, as his master's in chemistry,
Cool.
did what most advisors, I mean, what most chemists do when they get out of school. They go look for a job um, and then somehow wind up working for the telephone company, the New York Telephone Company, or 9X,
Yeah.
in human resources.
Oh, of course,
So,
because that applies, right?
right,
You're using
right,
that chemistry to create human resources.
right. Um, so yeah, he was the type of fellow that everybody around the office, when they had a question about finance, would wind up gravitating towards him. And in 1986, he said, I've been burned by his own financial advisor, quote unquote. And there's got to be a better way to do things. Let me start studying for the certified financial planning uh, certificate, which he saw a little ad in the back of the New York Times, and started his own business in 1986. And a couple years after, 9X was offering voluntary payouts to people who would leave the company. They were doing some downsizing. So, much to the chagrin of my mom, who was very worried about my father leaving a very stable job at the telephone company, um, he took the package and started doing financial advisory work full time. And as you could say, the rest is history.
Yeah, I love it. I love it. I think also too, because you and I had a conversation 2 days ago, and we were having technical difficulties. And my daughter's back there playing. Sorry, don't let that distract you. And we had some technical difficulties, and we actually had to schedule another call because our original episode didn't record. So we're recording this episode. And in that episode, you share with me that a lot of your clients are actually the children of your clients. So it's multi-generational, which is, I think, it's a big thing because it shows that, you know, the parents trust you enough and the kids start working with you. And that's kind of also what happened with you and your father, right? So there's a lot of continuity there. Um, any thoughts on that?
Yeah, so roughly a third of our clients are multi-generational. So the adult children of our clients, and in some instances, the adult grandchildren of our clients. And some of them, we get started working with them, as soon as they're 18 years old. Many of them have custodial accounts before then, and their parents want to see the next generation, you know, be as well versed in finance, personal finance, as they were, or they learned through working with our group here. Um, yeah, but it's interesting. You talk about continuity of the relationship and how it passes down, but my father built the firm a little bit differently than some of his peers did over the years. Um, a lot of them, in a lot of this industry, you have your primary advisor, and that's who you work with. You build nice rapport with them. Um, but if something happens to that advisor, you're kind of you're
Right.
transferred to the next advisor, and all of that history and rapport is lost. And my father said, from day one, that's not happening here. We are a team of financial advisors, many of who have carried the CFP designation, and we all have different backgrounds, have different specialties, and the client's going to benefit from that collaborative team approach. And of
Absolutely.
course, there are downsides to doing that. That's mostly operational and profitability wise for the advisor. And that's not important to the client. It's important to the client is that they get the best ideas from a couple of advisors taking different perspectives, bouncing ideas off each other, and giving the best solution to our client.
Maybe we could spend a moment to talk about your clients a little bit more and zoom in on that. Maybe you could describe in more detail the type of person who comes to you. What's a typical situation that they need you to lead them through? Any
Yeah, so
patterns?
absolutely. So yeah, just to touch back on our three primary clients, the younger saver, they're usually in their late 20s or in their 30s. They have strong earnings potential. They're going to be upper management or they're going to be an entrepreneur at some point. And they're really not sure how to or prioritize things. So we're making all this money, but they're not sure, which account to put it in, which goal to save towards. So, do you put it in do you max out your company's 401k? Do you open up a Roth? Do you open up a traditional account, a traditional IRA outside? Do you pay back that student loan? Do you start instead of in lieu of those things saving towards a down payment on a house? So it's really this hierarchy of where to save. Um, and that's typically the solution that we solve for the younger saver. I would say probably the bulk of our clients are the pre-retirees. So they come to us 3 to 5 years before retirement. They have a lot of anxiety. You know, can they retire when they want to retire? Can they retire early? When they retire, can they afford that second home or that vacation home? Can they go on yearly trips? Do they need a part time job to meet these goals once they retire? Um, and they have accounts scattered all different places. They have advisors. They might have an advisor, but really all they do is investment management. They might have their insurance advisor. They have their tax professional. They may have had a financial plan done at some point, but it's probably stale. And they have nobody to put it all together in a cohesive package, to look at it from a variety of different angles, to make sure that they can meet their goals over time. And finally, we have quite a bit of post retirees that have historically they've been do it yourselfers. They've been really good savers, but at this point they know maybe we could be doing things better.
Hmm.
Roth conversions, maybe they have an advisor that sent them a calculator, but really isn't taking into account the whole picture. Um, they're not entirely sure they've done things very, very tax efficient over time. Asset placement is important. Concentrated stock positions at this point, not entirely sure how to handle it. Concentration risk. They're charitably inclined, but not sure they're getting the biggest bang for their buck on their charitable contributions. And then, probably most importantly, typically what we see 9 times out of 10, and usually, in the household, there's one primary person that's focused on the financials.
Right.
And, somebody else has their other specialty around the household. And they start to wonder, what if something happens to me? Is my significant other
Hmm.
able to handle all of this during a time where they're most vulnerable, right? Their spouse is either incapacitated in some way or they're no longer with them. And so they come to the realization that maybe we really need to start to develop a relationship before their
Yeah.
spouse is vulnerable,
Yeah.
to build that trust, to build that history, to make sure everything goes as smoothly as possible during a really difficult time in their life.
Yeah. You want definitely want to be proactive. Let's talk about your young savers for a moment because that's interesting. I love that you serve that niche, or that demographic or that type of person. What are some of the questions that you find your young savers typically have when they meet with you for the first time or start working with you?
Boy, so I would say they know they should have done estate planning work, but they haven't. And
A young
again,
savers thinking about estate planning?
yeah, so typically they're
Wow.
dealing with a newborn, right?
Oh, okay, that makes sense. Yeah.
And may or may not have had a will. But now they know if they've had a will pre-child, it's probably got to be updated. Um, and it's important to recognize that just making the beneficiary the child is not a good idea, because if they were to inherit assets, they're a minor. So now this all has to go through a court system, and you're relying on the court to decide who's going to be in charge of that child's financial future. So if other court systems are anything like Massachusetts, it could take 2-3 years of probate before someone's figured out who's going to be managing these assets for that minor child. So it's important, and not many young savers realize they need a trust. The second you have a child, you need a trust. And a trust account, or a trust document, and subsequently a trust account, all it really does, it's very specific instructions for whoever's managing the estate, for the court system, whoever gets their hands on it, probably the lawyers. What's happening with these assets? Who's in charge of the finance for the child? Who's in charge of the healthcare for the child and the well-being of the child? And you could separate all those. They don't have to be the same person. So I'd say that's probably the biggest priority when someone comes in. Is people come in, they think I need financial advice, and I'm like, no, you really need legal advice at this point. But that's
Yeah.
what having a financial planner as a quarterback
Yeah.
really does, is
I'll
notice,
prioritize. Yeah.
prioritize where's the biggest liability right now. And 9 times out of 10, it really is on the estate planning side. I would say, a lot of times, more and more, we have very complicated employee packages. So a lot of times they have choices. Healthcare choices. Do you do the high deductible plan so then you can get the HSA, health savings account? Do you want that, or do you want a different type of health insurance? And then not only that, but insurance in general. A lot of times they have access to low cost group life insurance. So a lot of times, they're underinsured at that point because now they have a young mouth to feed. They have a spouse that's reliant on that income. And, so we'll evaluate the insurance need. And again, we don't sell insurance. None of us are licensed insurance agents. So we like to think we're as unbiased as possible in terms of evaluating, do you have enough insurance? So, and then we send them in the direction where it's most beneficial to them. And typically it's a lot of these plans have perks. And so we'll go through all the perks that they may or may not be, have access to, and, send them in the right direction.
I love that. Where do you typically find your clients? How do they typically find you? Where do they come from?
Yeah. So most of our clients are referrals still to this day. My father was probably one of the first, if not the first, financial advisor in New York to have a website.
Oh,
Um,
congratulations.
yeah.
40
So
years later. Yeah, congratulations. That's awesome.
So you'd be shocked how many times someone just Googles us, and we're one of the top people that come up because of all the content that we create, the times that we've been quoted in third party resources, newspapers, articles, etc. And for those younger people, the newspapers used to be like, you used to fold them out and there was articles on them. Now everything's online. And more, believe it or not, somehow artificial intelligence has picked up our company. And we're typically, if you search for fee only advisor, roughly in the areas that we have offices in, will be, the top one, two, three recommendations.
Awesome. That's great. Um, okay, so let's talk a little bit more about your practice and your vision for it. Um, so when it comes to your practice, where do you see it in the next 1 to 3 years? What's your vision? Are there any goals you're working on?
Yes. Some of them might be boring, but I would say a lot of them are technological. We've always spent a lot of money on the best technology for my colleagues and our staff. We have technology that multi-billion dollar firms are using in-house and very sophisticated systems. And technology seems to be advancing at such a rate that there keeps being new players in the market that are coming up with better and better and better systems. So it's almost a full-time job to keep up with technology and operations management. My father was also part of the Navy. And so from for forever now, he's been really into process and procedures. Um, so we have a very, lengthy process and procedures manual. Thankfully, I have a couple of people at the firm that are really good at that, and we keep updating them. But there are technologies now that start to bring in the different technology solutions, and then they start talking to each other. And we think that's going to make for a much better client experience and also free up our time. So we're not typing in data, and instead we're out talking with our clients,
Sure.
finding solutions for them.
Yeah. So you're less time spent doing a lot of the administrative things, the data entry things, the things that need to be done, but that ultimately don't um, involve the relationships, right?
Yeah, and that's the most important thing is the relationships. It because without speaking with clients directly, it is difficult to be proactive in terms of identifying opportunities that they could benefit from, but more importantly, you know, identifying the liabilities that they might be headed for. And unless we have that, we have probing questions and a great relationship with each one of our clients, we're not going to be able to identify those things.
Yeah, absolutely. So in going this direction, this vision that you have for it, you said it's boring, but to me, this is kind of interesting. I think technology is really changing quickly. Is there anything standing in your way or any challenges that are getting in front of that?
Yeah, it's mostly to change over systems and anything, especially with personal information as sensitive as the stuff that we work with on a day-to-day basis. It's difficult to take liberties with just doing stuff really quickly. You have to be methodical. You have to really vet the people that you're moving to and get um, their safeguards and what they're doing with our client data. So you're going to be very careful with that. And I think it's just more the anxiety of making this huge switch and then figuring out 6 months later, there's a new kid on the block with even a better, more comprehensive resources. Um, yeah, and then also, with a smaller firm, somebody's time is taken away from the client to focus on, system migration. So, you can't do it too often,
Exactly.
or else again, you're not spending time with the client.
Yeah, you definitely want to have that balance. Um, how about this? As your practice has grown, are there any programs or trainings that have shaped how you shaped your approach or positively impacted how you serve your clients? Is there anyone that you'd like to give a shout out to? Does that question
Well,
make sense?
yeah, for sure. So I think as I think we touched on in the our uh, our dry run.
Yeah, our,
Um,
our, our preview interview. Yeah.
my career took a turn a few years ago. Um, I started out in investments. I've been fascinated by investments my whole life. Growing up quite literally under the desk, listening to my dad's phone calls with clients, going to industry conferences as a teenager and sitting in on the conferences because those were our family vacations. The Morningstar conferences, the Schwab conferences, TD back when TD had conferences, NAPFA, National Association for Personal Financial Advisors. Um, those were our family vacations. And my father would put books in front of me on Warren Buffett as a young kid. I was doing book reports in junior high and high school on Warren Buffett when others were doing book reports on Michael Jordan and other athletes. I was fascinated by investments, compounding growth, business, how businesses were operated, how they were managed, um, the concept of being a good fiduciary as a CEO of a company. And so I grew up in that industry and investments. And I guess it was about 15 years ago, it really came to the we came to the conclusion that indexing, novel concept, right? Today, I think everyone knows about it. But 15 years ago, and even today, there's a lot of financial advisors still trying to pick, God forbid they pick individual stocks. Boy, good luck. But even picking good actively managed mutual funds is so hard. And it's nearly impossible on an after tax basis to find an actively managed mutual fund that's going to outperform their respective index. So, having switched to the index approach on the equity side of investments, that freed up a lot of my time. In addition, we started using Orion's Eclipse to help us manage uh, our clients' portfolios. Prior to doing that, it would take weeks and months to rebalance clients' accounts. It was practically a full time job just rebalancing accounts.
Hmm.
So, having gone to indexing, freed up time, having using technology to help aid in us rebalance clients' accounts, freed up time, I pretty much put myself out of a job. So, thankfully, when you work for your father,
Congratulations.
thank you.
Yeah.
You work with your father, you say, hey, either I'm going to pivot to something else or you could fire me and I can move back in as a grown adult with kids. So, um, over time, I saw the value sitting in on client meetings consistently. Our certified financial planners were adding value in ways that were multitudes beyond the time spent trying to pick individual investments. And so I said, Dad, Ron, I really want to start studying for the CFP. And he said, absolutely. I think in the back of his mind, he never said it, but he probably always wanted me to. The career pivoted towards a more of a planning and relationship role rather than kind of more of a back office investment role. And During COVID, passed the exam, thankfully, first try, knock on wood.
Yeah.
And I guess the rest is history in that sense. And I will say a couple of things during that process really opened my eyes, and things that I enjoyed that I didn't realize would enjoy. I thought estate planning would be a bore. It's actually quite fascinating. And the thousands or tens or hundreds of thousands of dollars that we're able to save for clients and working with them on their estate plans is just fascinating. And then two, coming out of that, I never want to stop learning. Recently did the Chartered Advisor in Philanthropy, the CAP program. more and more of our clients, as they've become wealthy and have more money than they need, have been more charitably inclined. So we really saw the opportunity to have somebody at the firm, be it me, that was very interested in this, to start studying to learn about, um, the different players in the charitable process. So not only our clients being the one that's donating the money,
Mm-hmm.
but from a perspective of the charity and receiving the money and how they view things. And so we really have a 360 view of the whole charitable planning process from this program.
I love how that's been able to help you be more comprehensive in what you're doing. We never do these things alone, so I always like to ask this question on the interviews because it helps me understand more about how you think and how you're looking to grow and learn and add more value to your clients. So I love that you're doing that. Okay, maybe we could talk a little bit more about what it's like to work with you. Maybe you could walk us through your actual process. So when somebody signs up to become a client, say today, maybe you could tell us what happens the first 4 to 8 weeks. What does it look like to work with you during the course of a calendar year?
Sure. So yeah, our planning team is wonderful. They have a set out process, and it really starts with simultaneously a comprehensive cash flow worksheet, which we get all of your income and all of your expenses, and pretty much how much you're saving or how much you're spending if you're in a deficit, to get things running. At the same time, we're in constant communication about goals and objectives. So again, do you want a second home? What location is that second home? Because we got to figure out how much it's going to cost. What are property taxes down there? What is insurance going to cost down there, especially for the size of the house? In the case of Florida, can you get insurance? Um, and hash all those details out. So it's a lot of back and forth, mostly through email, but the occasional conference call. And we typically have a lot of preliminary calls before the comprehensive financial plan. We open accounts. We use Charles Schwab and to a lesser extent Interactive Brokers, but Charles Schwab accounts are opened to be ready to accept assets and consolidate assets and streamline investments. So you're set up with your own secure client portal so we can securely share these documents, which is more and more important nowadays.
Absolutely.
And then eventually there becomes a time where a plan delivery meeting is set up. We go through the plan, make sure the client's on the same page, agrees with the plan, they sign off on the plan. It's typically in two stages. We have an investment plan and then the comprehensive financial plan. What's interesting is that the investment plan, we have a target rate of return, and you'll see that target rate of return move over to the financial plan, because that whole financial plan is not going to work if we can't achieve that target rate of return. We go over what investments we will or won't make, what the volatility of those investments or your portfolio will be over time. Are you okay with that? And then pull that all into the plan. Like most advisors, you run Monte Carlo analysis. So in essence, what that means is, say you have a deck of cards, but instead of Jack of Diamonds, Ace of Hearts, or whatever, they have the stock market returns or the bond market returns on the back of each card. As you know, sequence of timing of returns matters just importantly as the actual rate of return. And it shuffles that deck up and then spits them out in 30,000 iterations and looks 30,000 times whether or not your plan works as we discussed,
Mm-hmm.
or if there needs to be some changes made. So we also do bad timing analysis, because one of the big questions retirees have is, what if the year we retire, the stock market's down, we go into another great recession, like 2008, 2009?
Mm-hmm.
Can my retirement plan, is it resilient enough to withstand that? We answer those questions. And if it can't, we provide different scenarios, multiple planning scenarios on how it would survive that type of negative situation. So once that's the plan sign off on, we really get to work on moving accounts, updating beneficiaries, working with your estate planning attorney, working with your tax professional and coordinating taxes, moving assets around so a little bit more optimized in terms of taxes and return going forward. More and more now, clients are coming to us with concentrated stock positions that need to be diversified.
Mhm.
So there are any number of ways to get out of those concentrated positions, in many cases tax-free. So very simply, we could save a client possibly $250,000 on taxes from the get-go, from had they worked with us versus
That's
had they
awesome.
not, or defer those taxes out for a period of time. And time value of money, if you defer those taxes for a period of time, you're in better shape than had you paid those taxes today. So there are a lot of advanced scenarios now that we're working with our clients on to avoid those taxes.
And what does it look like to work with you during the course of a calendar year? Do you guys do like quarterly meetings? How do you kind of keep up with the ebb and flow of your clients' lives? What does that look like? What's the basic structure?
Yeah, the basic structure is we meet once or twice a year. Either one meeting is sometimes in person, unless you're remote. Another meeting is virtual, um, and we go back to the financial plan. Right, the financial plan is an organic, ever-changing document. It's not you get your financial plan and it goes in the drawer and collects dust. It's an organic document that we're constantly updating. So during our meeting, we'll bring it up. There'll be action items. We're going through each action item to see where we are in the process to make sure it's getting done.
That's
And we're going to
awesome.
be a big pain in the butt,
That's
no matter
good.
how much you like
Little
it or don't.
accountability, right? Little
Right.
accountability, Yeah.
So yeah, a lot of time, I think one of the biggest misconceptions is, oh, people come in, I just want a financial plan. All right, but I guarantee you're either going to procrastinate implementing it, or there'll be some items you're not going to implement, and it's going to be very costly. So we think, having an ongoing relationship with a financial advisor is very important. Um, so we also, on an ongoing basis, not every year, but pretty much every other year, we look at homeowners insurance, because one thing that we've noticed is that as house prices go up, a lot of times people are underinsured. And so in the case of a catastrophic event like a fire, you might only get, 2/3 of the money you thought you were going to get to replace your home. So that's one thing we look at. Um, we double check again with asset creep that umbrella insurance coverage is up to date. More and more clients are, they have net worths of $3, $4, $5 million. It actually becomes difficult to get umbrella insurance. Sometimes you'll have your primary insurance with one company, an umbrella insurance with another company, but we make sure you're covered there. Even so, things like auto insurance. We could a lot of times save a client money if they have an old car, and they're still fully insured on it. For the replacement of that car, you can get rid of that when you save you a couple $100 a year. And then sometimes, once you retire, you might not need that life insurance policy anymore, because that your spouse is not dependent on your income anymore. So, clients come to us on occasion with whole life insurance. Well, okay, what do you do with it? Well, you might want to let it lapse, but it's probably not. You might want to sell it. There are different options to, take a paid up option on it. So we evaluate that and save on premiums. And then the question that every client has again and again is, do they need long-term care insurance? So we'll typically run a scenario with and without long-term care insurance, um, to see if it makes sense for that particular client.
So in other words, you don't do that much at all with your
It's
clients.
pretty streamlined. Yeah, you just lay back and
Yeah, man,
click
pretty
a button once or
comprehensive.
twice, and it's pretty easy to manage your own stuff.
Yeah, yeah. No, I
I'll say
love
it's pretty to manage your own stuff, not very well.
Sure, there's other
but if
things
you
that we
want,
want to do also.
yeah,
Not
but if you want
everybody
to
grew up
optimize,
under their father's desks listening to and reading in books on investment on investing and doing book
right?
reports on Warren Buffett instead of Michael Jordan. There's not many people
Yeah.
who say
Yeah,
that.
and it's that goes back to the do-it-yourselfer, and they've been very proud that they've made money and done well over time, and mostly we've seen that they've made their money and built their net worth because they've saved a lot, and it might have been in spite of what they've done with their investments. Because typically a do-it-yourselfer is probably not tracking their overall rate of return because they probably have money in different places, right? They have their Vanguard account, they got their Fidelity account, they probably have their Merrill Lynch advisor account, and nobody's really looking at all of it to give them, a bottom line rate of return. How have you done this year? But not only that, how could have you done if you had been in a benchmark?
Hmm.
So it's very rare that one, someone even knows how to calculate that rate of return, or two, they're comparing it to anything in a completely objective way. And a lot of times, the asset allocation research that they're going on is the asset allocation research that was developed 20, 30, 40 years ago that's still being touted today by the mega firms out there because one, they can't invest in the more modern asset allocation things available to them because they're too big. So, and two, if they did, they manage so many billions and in some cases trillions of dollars, it would be virtually impossible for them to pivot at all. So they're stuck in this old adage of, asset placement research that's outdated because they were dealing with numbers and not people,
Hmm.
and then asset allocation research that could be improved dramatically, and most of the time achieve the same rate of return, but a much smoother ride.
Love it, Stephen. All right, so last question. For anyone listening who wants to get in touch with you or is curious about whether or not you're the right fit to work with, what should they do next? Where should they go?
Sure, you can book a complimentary or free discovery call. You can go to www.rwroge, it's spelled roge.com, and talk with one or two of our advisors on the call. You can find us on Facebook. You can find us on LinkedIn, Instagram, Snapchat, not so much, but everywhere else, we have a profile.
Love it. Love it. Stephen, thank you so much for coming on the podcast and sharing your story and talking about your clients with us. We appreciate you.
Thank you for the time, Greg.